Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money world, and boy do we have some interesting transactions to sift through today. Get ready because we're diving into a company that has been busy making big moves. So, what is the big news from IC Open Infrastructure Company LLC? Well, as of the 1st of October 2025, they've been quite active, especially when it comes to selling shares and making some rather significant investments. They're retelling us they V-sold a whole bunch of unregistered shares to raise a substantial amount of cash. Think of it like this, they sold pieces of their company to investors without going through the usual public registration process. They did this using two different pathways, one for investors in the United States who are considered accredited, meaning they financially sophisticated enough, and another for investors outside the United States. Now, let's look at the numbers. The company has reported sales of various types of shares, like FST shares, FDT shares, IT shares, and FJT shares, under what they call Series I. Then there is Series 2, which includes FS shares, FI shares, FJ shares, and E shares. It all adds up to a lot of transactions. They've sold quite a few shares, but the most important figure here is the money they got for them. The total amount raised from these share sales is an impressive $8043100. That's a significant chunk of change, indicating strong investor interest in what ISC Open Infrastructure is doing. This filing is all about letting the US Securities and Exchange Commission, or SEC, know about these private sales. They are stating these sales were exempt from the usual registration requirements because they were private placements, meaning they weren't offered to the general public. This is a common way for companies, especially those that are still growing, to raise capital quickly without the lengthy and costly process of registering with the SEC for a public offering. Essentially, they found willing buyers for their shares directly. But that is not all. Just a day or two after these share sales, on the 2nd of October and 3rd, ISC Open Infrastructure Company LLC went on a shopping spree. They acquired a seed portfolio for a massive $8065345. This isn't just one thing they bought. It is a collection of different investments across various sectors. First up, they invested in National Express LLC. This company is involved in transportation and logistics, specifically providing bus services for students and general transit across the United States. It sounds like they're getting a piece of the action in companies that move people around. Next, they've invested in the power and utilities sector by taking a stake in Matterhorn Express Pipeline LLC. This sounds like a big energy infrastructure play. It's a newly built natural gas pipeline that is designed to transport gas from the Permian Basin, a major oil and gas producing region, all the way to the Katy area near Houston. Texas, think of it as a major artery for energy. Then to raise an investment in the digital infrastructure sector, but this time it is a credit investment in Substantial Holdco Limited. This means they're not buying direct ownership, but rather lending money or providing some form of debt financing. Substantial Holdco Limited itself is a holding company that owns fiber optic service providers. These companies offer internet services to homes and businesses across various parts of the United Kingdom. So they are betting on the growth of internet connectivity globally. Finally, they've also made another credit investment in the power and utilities sector, this time in Pelican Power LLC. This company owns thermal power generation plants, which means they generate electricity from sources like natural gas or coal located in Louisiana and Texas. It seems SEC is really diversifying its bets across different types of infrastructure and energy assets. So, what is the story here? ESU Open Infrastructure Company LLC has strategically raised a lot of cash through private share sales, and immediately almost all of that money has been reinvested into a diverse portfolio of infrastructure. Related assets, they took in about $80.4 million and spent about $80.6 million. This shows a clear strategy of using investor funds to acquire significant stakes in companies that are essential to how our modern economy runs. They are investing in transportation, energy pipelines, internet infrastructure, and power generation. Looking at this, ISQ's direction seems to be focused on building and controlling key infrastructure assets, which can be a very stable and long-term business model. The fact that they are using unregistered offerings means they are likely aiming for speed and flexibility, avoiding regulatory hurdles that come with public offerings. However, this also means that the investors in these private placements are more sophisticated and are taking on a bit more risk compared to investing in publicly traded stocks. The risks here are multifaceted. Investing in infrastructure projects can be subject to regulatory changes, commodity price fluctuations, environmental concerns, and long development times. For example, a pipeline project could face delays due to permitting or opposition, and power plants are always under scrutiny for their environmental impact. Also, by acquiring a diverse portfolio so quickly with almost all the cash raised, there is always a question of whether they conducted sufficient due diligence on each investment. Did they pay the right price for each of these assets? Are these investments truly sound for the long term, or are they just trying to deploy capital quickly? On the other hand, the upside is significant infrastructure. Assets often provide steady, predictable cash flows over long periods, making them attractive for investors seeking stability. The sectors they are investing in, like digital infrastructure and utilities, are generally considered essential services that will likely see continued demand. In conclusion, Ethiopian Infrastructure Company (LLC) is making bold moves to establish itself as a significant player in the infrastructure space. They are aggressively deploying capital raised from private investors into tangible assets. While this strategy offers potential for strong long-term returns, it also comes with inherent risks related to execution, market conditions, and the complexities of managing a diverse portfolio. It will be crucial to watch how these investments perform and how ISQ manages its growth. Alright, that is our breakdown of ISQ Open Infrastructure Company LLC's latest moves. What is your take on this rapid deployment of capital into infrastructure? Do you think it is a smart bet, or are there too many risks involved? Drop your thoughts in the comments below. If you found this analysis valuable, please hit that like button, it really helps us out, and subscribe for more deep dives into corporate finance also. Don't forget to check out our Discord community linked in the description to continue the conversation. Thanks for watching, and we'll see you in the next decoding.